Okay, today's trade review is going to be on PAY. It was the most popularly requested choice for a video review this week. I'm glad that it was actually chosen because not only did it have some really interesting price action on Friday in terms of follow-through strength, but it brings into play a bunch of other trading principles and setups from the last week or so that I think are kind of instructive. So right now we're looking at the multi-year chart. This is the 3-year chart on pay. I have a couple of lines here, one up at 55 at two tops in the last few years, and then I also have a line here drawn at 30. Over the last 6 months or so, it's come down to this 30 area and then finally broke through on September 26. So we have a weak stock, trending lower, trading below an important long-term support level, and approaching this 27.5, which I'll draw another line, which was the next support level below 30. If I can just get my chart to draw that, apparently it doesn't want to cooperate. So then we have this 27.5 going all the way back here to 3 years ago. And so that's what it came down to, was consolidating against that. So let's zoom in a little bit and see what this looks like. And so it caught our attention here on the 25th. It broke below 30. Great, just great follow-through trade on the 26th. Below $30, drove down a couple of points. Then we continue to monitor it. Below long-term support, consolidating for 3 days right here against this 27.50. And on the fourth day, it actually gapped up. I'm not sure if there was some sort of news here. It actually opened it at 29, went straight back down right below 28. And the following day, it looked like it was going to go down to the next area. So let's zoom in on the 5 days. Actually, it goes 6 days. So if we zoom and get rid of the pre-market, so what we can see is it opened here at 29, they drove it down right back down to 28 again, and it was holding below 28. I think some traders on the desk initiated shorts on this day. And remember, if a stock is below long-term support and it gaps up and immediately is sold off in a controlled fashion, some traders may initiate their short position even though technically it still hasn't taken out the low from the prior couple of weeks. So this actually gives a perfect picture. Here's the drive below 30 down to 27.50. I believe some people were initiating shorts here against 28. The following day it comes down, and what does it do? It consolidates right below 27.50. This is a spot where I would definitely be looking to put on a short position. The one thing I'll say about this is a stock that's below a big long-term support level, below this 30, and then consolidates below 27.50, which was the support from 3 years ago, and does not start to break down, you want to start thinking about, when it does come back up, is this stock just done? Is it just down at levels where there are people interested in buying the stock in the 27s and the 28s? And if that is the case, you want to make sure you have your alert set for 28.50, where it had all sorts of trouble on this initial day it drove down. And so what we saw here was on the 3rd of October, the short didn't work below 27.50. I think this is what got people to cover. One thing that we didn't see on the desk was the following day, when it actually showed strength and got above 28.50 and then even above 29, people were not looking to trade this on the long side, which I was surprised, because the mindset is always, for me, I have an idea. I think people are trapped who are buying it between 27.5 and 28.5 for a week. It gets below there, I'm going to short it, because I figure the short-term traders who are buying here, some of them are going to have stops. If it doesn't trend down from there, maybe they don't have stops, and these are longer-term players just looking to buy as it comes cheaper and cheaper. But the next day, when I see it actually show strength and shows up on the radar and gets above 28.5 and my alert goes off, I'm saying, wow, there was no sell pressure below 27.5. It didn't break down. It's now trending higher. It's above 28.5, where it has not been above, other than right on the open on this day. It gapped up here, but immediately was sold back below. Failed here the day that it came down at 28.5. Failed here again the second day. Several times you can see it was basically being sold against this level. This has to catch your attention when it's above 28.5 here, and spends a half an hour consolidating above that level. So let's just zoom in on that a little bit more so we can kind of see what that looks like. So this is what caught my attention. This is why we talked about it in the morning meeting, because it consolidated above 28.5 and closed strong at 29.5, and at a minimum you want to see what it would do here at this 30 level, which was the long-term support prior and where it broke down from, and then 31.50 to 31.70 was an area that we were targeting if it was strong because of the long-term downtrend. So you can see here's the pretty steep downtrend. I drew a downtrend line. It actually coincided right around this 31.5. This had also been some prior support area here back in July and August. And so this line here, the support line, coincided with the downtrend line. And if it did get above this 30, the longer term support, this was a pretty good target area right here to 31.50 to 31.70. Doesn't mean that it's necessarily going back up to $35 or $38, the next two longer term resistance, but at a minimum, if it gets above 30, you're looking for that trade to come right back here to the next prior support area of 31.50, which again coincided with the downtrend line. Let's zoom in on it. And so this really was a trade that started on Thursday, and I think anybody who was looking to trade this on the swing side on the breakdown, it was just as good a swing when it consolidated above 28.5 if you got in here and it closed at the high of the day to see what would happen at the 30 level. And in this case, when it got to the 30 level on the open, it just exploded through it. So it was the number one or the first stock. That and INFA were the two stocks we were looking at as second day and technical plays that were set up pretty nicely. If you didn't buy it right on the open here at 29.80 for this initial drive, you probably were going to wait for something for it to settle down a little bit and move sideways. Let's look at the 2-minute to kind of see what that looks like. So assuming you didn't come in with it and assuming you didn't buy it first ticks right on the open, what we want to see is after, well, there's a couple things we want to see. We want to see what it does at the 30 level, which is the prior long-term support. If we do get a momentum move above it, and it moves 50 cents to $1 away from it pretty quickly on good volume, that's our confirmation that we're probably looking for this next area here, this 31.70. So what we saw was a strong drive, good volume. You can see the volume going into the close yesterday was accumulated. We see the volume in the open was very similar, and once we get that first pullback from 31 close to this 31.50, that's where we are looking to nibble. I'll zoom in a little bit even more for you. Here's the 1-minute. So on the open, very important to understand, the open is between 9:30 and 10 o'clock, that our consolidations we look for are shorter. 3 to 5 minute consolidations, those are the types of consolidations we want to see to try to get into a position. After 10 o'clock, we're looking for 25 to 30 minute consolidations. But in that first half hour, when time is compressed and moves are compressed, we want to get in on some type of horizontal consolidation of at least 3 to 5 minutes. We had that after the initial pullback, 1, 2, 3, 4, 5, 6, 7, 8. So about an 8-minute consolidation here. An attempt to move through the high here, fails, comes back down, but doesn't get below 30.50. So let's just talk about how we would manage this. So it pulls back. You're looking at this 30.50 level, right? It had some trouble right here on the open. So that's a level where you would look to buy into that level, probably with a stop for half below it and a half below 30.40. You want to give it an appropriate amount of risk. You risk a few pennies, it's usually not going to work. So the way I tier out of my positions if I lose are in two spots. Usually when I'm first, it appears that I'm wrong, and then when I'm definitely wrong. So stop at a half, stop at a half. When I notice that they're buying, and let's go to the ticks so we can kind of see a little bit better. We can identify where there's some buying activity. So it pulls back here, and the first pullback is to about 55 cents. So once I see that the pullback stops here at 55 and it popped back at the 70, I know I want to buy against 55 cents with my stops below this level right here and here. Some people might even have a stop right below the 55 buyer. I don't see the sense in that, and this because many traders and institutions will buy at the half level, and so you might as well just put the stop below the half, not below this actual first dip. It comes back down. That's where I want to buy in front of the 55. That works fine. And then the other thing you want to do is if it takes out the prior high, look to buy there on momentum and any type of consolidation above. In this case, this high here is 31.09 or 31.08, something like that. had the good fortune of, and we're looking at the tick chart right now, it actually got above here, and there appears to be a seller right here at 10 cents. So the most logical thing would be to buy when the 10-cent seller lifts, and if we look at it, that was pretty clean. So, and this is how it should trade in a stock that's very strong, that breaks through where there's a seller. It could test that level, but it really shouldn't drop it. So any momentum buys you had here above 10 cents, adding to the initial pullback buys, those should be hit out of if it drops that level. And then in terms of where you're going to sell, certainly selling into the 31.5, again, whole numbers and halves, that's just where a lot of orders happen to be. That's where you can take off risk into this half level, and you can see the first time it touched it, it pulled all the way back 25 cents. So perfectly good to take your sales here. Position management is really important. That's the big difference between experienced traders and less experienced traders. It's easy to spot sometimes these levels to get in, but how do you manage the position to actually maximize the profit? Take some off. And if you notice, before it got to that 50 level, there had been some buying in the low 20s. What I'll do is I might sell half my position here, and it comes back down to the 25 level, buy those shares back. And if you really see some strong buying on the bid, maybe even add some extra shares, risk a nickel on all those extra shares, and who knows, maybe you catch another trend up to all the way to $32 a share. So this one worked kind of nicely. The trade peaked out at 10:30 in the morning. I think I tweeted, if you were looking to get involved, to buy on a pullback to 31.20 or 31.30. I thought that would be a reasonable pullback from $32, and it actually eventually pulled back to that area to about 31.20 or so. Kept on going a little bit more, but at the end of the day there was some more buying pressure and closed above 31.30. As I said, on the longer term, it was a reasonable thing to think that it could get to this longer term downtrend. The question now becomes, can it have some more strength over the next few days? If it does, and let's say holds above $32 a share, you're going to be looking for it to move back up to this 35 area right here. 35.5 is the pivot high here on September 5th, 35.53. And then if we're in an uptrend, if it's really broken this long-term downtrend, the next area, you have this gap down here on August 8th to 36.89. And so there's some more upside. And so again, very important to be open to this idea of, if a trade in one particular direction doesn't work, to be aware that it can go very powerfully in the opposite direction. So I'm glad people picked this one as a video review. There was a lot of information here. Look for this to set up the next time something that's been trending down, it tries to break to the downside and moves up powerfully. A lot of people will pile on very quickly and use the longer term downtrend line as well as the next major prior support area as targets to the upside. And thanks for joining me on this video trade review for PAY.